Hi friends, Don Barar here with the November 2025 Real Estate Review and Market Forecast for Fountain Hills. Before we get into the Fountain Hills numbers, let's talk about what is going on with mortgage rates and why they went up following the Federal Reserve actions that lowered interest rates. Hopefully this explanation will help you understand the inner workings of the bond market and by extension, mortgage rates. First, a little background. When the Federal Reserve changes interest rates, they are only changing the federal funds rate. This federal funds rate is the interest rate that banks charge one another to borrow money to maintain federally mandated reserves. In theory, this should also lower interest rates across the board. But in practice, there are other factors. These include inflationary outlook, trader expectations, and future intentions of the Federal Reserve. You can see what happened in this 30-year Treasury yield chart from CNBC. Back in August, the Federal Reserve met in Jackson Hole, Wyoming, indicating they were considering cutting interest rates 3 times this year. Predictably, interest rates went down. On September 16th, the Federal Reserve reduced federal funds rate by 0.25%. But interest rates went up. They went up because some bond traders anticipated a more aggressive reduction of 0.5%. These traders then sold their bonds, reducing bond prices, and interest rates went up. On October 27, the whisper came out that this might be the end of the easing cycle and interest rates went up. On October 29, Chairman Powell announced that the Federal Reserve was cutting the federal funds rate by another 0.25%. Then the chairman also said that another cut for this year was not a foregone conclusion. The bond market did not like that, and interest rates climbed almost 0.1%. Why did bond traders react negatively to this statement? Well, because they had already priced into the market 3 interest rate cuts for this year. And when the chairman states that he is uncertain about a 3rd cut this year, traders sold their bonds, lowering prices, and interest rates went up. That is why we saw mortgage rates increase after October 27. But that's enough about interest rates. Let's see what's going on with the Fountain Hills real estate market. For October, median selling price fell significantly to $819,000 and median selling price per square foot increased to $379. Lots of small houses being sold. Small houses have inherently higher prices per square foot than larger houses. Why? Smaller homes have a higher price per square foot because the value of the land is spread across fewer square feet of living area. Still not sure about this? I'll place a link in the comments section on a video I did several years back that explains why. The number of homes sold in October 2025 was 40 units. This exceeded my pre-month estimate of 32 units. What happened was that homes that went under contract in early October closed escrow prior to the end of the month. Lots of snowbirds sped up their close of escrow without waiting the usual 30 days so they could get moved in before winter. For the month of November, I forecast that 40 properties will close escrow. From here on out, we can anticipate sales to increase as snowbird buyers return to find that winter home getaway. Beginning November, as forecasted, inventory increased significantly from 141 to 156 units. Inventory is about 20% greater than it was this time last year. What was odd that most of the inventory increase came during the first 10 days of the month. Then it tapered off. This makes forecasting inventory for November difficult. While I still anticipate an inventory to increase to begin December, some homeowners may hold off placing their homes on the market so as not to be interrupted by showings during the holidays. This has implications as whether we remain in a neutral or seller's market. Let's look at the inventory turn rate. This is calculated by taking the current inventory of homes and dividing by the number of homes sold the previous month. Inventory turn rate is a terrific measure of determining whether it's a buyer's or a seller's market. A result greater than 6 months inventory is a buyer's market, and less than 4 months inventory is a seller's market. Anything between 4 and 6 months inventory is considered a neutral market in which neither buyers or sellers have the upper hand in negotiations. We begin November with an inventory turn rate of 3.9 months, just barely a seller's market. I still believe we're in a neutral market because, as we've demonstrated in October's report, prices have been stable for the last 12 months. To me, there does not seem to be any reason why prices should increase or fall. And by definition, neutral markets are ones in which prices are stable. However, whether or not we remain in a neutral market or a seller's market will be determined by how strongly inventory increases. As of this recording, I anticipate that we begin December with either a weak seller's to neutral market, somewhere around an inventory turn rate of 4 months. That's it for the November 2025 Fountain Hills Market Report. If you've not already done so, subscribe to my YouTube channel, Arizona Real Estate with Tom Barar. And I'll be certain to get you more great real estate videos on where to go and what to do in the Valley of the Sun. Talk with you soon.